Good afternoon, traders. This is Christian from Market Trading Group, and this is your end of day market recap for Wednesday, the 20th. A lot of things going on today in this market. I was just listening to some commentary on CNBC talking about what else? The word momentum and the unwind in momentum and the over positioning in momentum stocks, right? They really like that word. I was listening, speaking of CNBC, I was listening earlier to some pretty good commentary by, I liked what Liz Ann Saunders had to say. I believe she's with Schwab these days. And she was mentioning that, yes, you could call it momentum, but it's also different factors. It's high growth, it's expensiveness. And we've seen kind of just a reallocation, and Michael Santoli was saying this too. From time to time, we see this trade out of the overcrowded names and into some of the areas that have either underperformed or just underpositioned. And I think that's all quite normal in this market. And the trick, of course, is to not be long some of the names that are getting rotated out of. And that's easier said than done when a lot of those names that did get over, they got overcrowded for a reason. And the valuation got extended for a reason. They're really good. Some of them are really good growth stories, and they've performed really well. And what I see a lot of is analyzing of short-term performance. Oh, look at how much Palantir has gone down this week, right? Well, you do have to kind of zoom out a little bit because Palantir's up over 106%, and we're we're sitting here and it's August. It's not even the whole year performance. It's 106%, and that factors in what it's come down to over the last week. So just to kind of put things in perspective, yes, there's going to be profit taking and things do get stretched to the upside. Now, let's talk a little bit about the overall market, and risk disclaimer in front of you. By the way, everything that I'm going through is for information purpose only, not giving out any advice or recommendations. So, if you took a little bit of a haircut, like if you held some of those names that have performed really well this year, well, you probably, depending on where you got involved in those names, and that includes Robinhood as well, you probably are sitting on some really good gains. So, the point that I'm making here is don't get so super focused on the short term. I know that's not easy to not to do because we if you're a trader and you're in front of the screens all day long, you probably are focused on the short term. But let's talk about basically what happened today. Is that it did feel like a little bit of a washout with the Qs really getting hit hard in the first hour of the day. They came back and they only finished down 0.6 of a percentage point. SPY finished down 1/4 of a percentage point. Small caps finished down 1/3 of a percentage point. So I don't know. It's kind of funny to me. There's a lot of like victory laps going on between, maybe a week ago it was the longs, now it's the bears, and I don't know. It doesn't seem like really that big of a deal at this point. Now, again, a lot of those groups of stocks got hit harder, and I've been in some of those names, and it's not fun having to sell some of those names that when they do break down. But there were some nice things that reversed today. I'm going to talk about Bitcoin and the crypto move. Gold finished up 1%, and then there's some areas too that I want to kind of focus on a little bit here, particularly the medical devices. I've seen the medical devices be on the board in terms of strong performers now a couple times over the last week. To the downside, the home builders really got hit hard today, down 2.7%. That's been a tough group. I have not really got fully embraced the rally in home builders. My thought is that you're going to need a bigger move in bonds, and I don't mean what Powell is going to talk about on Friday at Jackson Hole, but he's going to mostly home building stocks are affected by is long-term rates, right? And that you could look at TLT, which was up slightly for the day, up 0.2 of a percentage point. But until TLT really starts to get going, and again, maybe the home builders have been kind of future pricing things out, but I still think it's going to be not an easy road for that group. Transports were down 1.5%. They led lower. I think they were outperforming the other day. So let's get into some of these charts because I found I'm going to come back to that commentary on CNBC because again I don't usually quote them, but I really thought they had some interesting things to say today. So let me bring up what's the do I have the right chart up here? Let's see. I think it's this one. So let me get to. Sorry for the delay there. So there we go. So looking at let's talk about SPY for a minute, right? And the rotation that you're seeing because RSP, and I know a lot of people are quoting RSP, but that outperformed again today, only down 1/10 of a percentage point. But what do we know right now? And we're not through this week, but this is a pretty nice hammer bar after a couple days of decline. We could be putting in a higher low from where we were the last time that we had some volatility. Remember that was at the end of the month. This was July 31st, and then we had a big move lower, big gap down, and we finished on the absolute lows of the day. Looked horrible on that first trading day of the month, only to kind of come back. So it's a reminder that sometimes, and again, why I talked about like looking at the bigger picture. There could be some nasty short-term moves, but look at how quickly we recovered from that. And like that was surprising to me how well that we moved higher back right on the second trading day of the month. So this was the weekend. This was Friday and then the weekend. And then we had a really nice run to new highs. Now, we're sitting here, we did not break into the value area for back into the August value area, and we held up here pretty well. So, I mean, that's pretty good. One of the things that I had said earlier is this just another shallow dip. We've been seeing this now since April, where there's just been a lot of shallow dips that have been happening in this market, and so far that's what we have. I don't want to say, again, one day is not a trend, but I would have to say like this is pretty good looking in terms of that. Just looking at the 1 hour chart too, we do have to get through some things here. I would watch this 200 period moving average. We're still below value for the week, but again, here's the value area for the month, which is the more important thing that we bounced off of. All right, and again, I'm just going to look at the 5 minute here chart too. Um, we basically just came back to almost the open. We couldn't get all the way back there, but we got close to it. For tomorrow, easy level. This is the value area for tomorrow, and I would be watching 638.07 there to see if we can get above that. Again, this value area is based on all of the activity from today. So that's your starting point for tomorrow is whether or not, if price can manage to get above there, then the recovery is on. Qs, which has been started to show that relative weakness since the, sorry, I can't speak, since the towards the end of last week. Came back very nicely today. Again, had a long way to come back to, but still closed right around the top of the value area and broke in. It looks like I don't think this is going to. Well, I know it's not going to trigger the bearish 80% rule, but it is below the 20-day moving average, and there was a lot of that, by the way. Like going through. I think I went through in yesterday's video just a lot of names that broke the 20-day moving average. So you don't know if that is going to be a complete washout, right? If we go through some of the popular names, NVIDIA came back very nicely today, but still below the 20-day moving average. Palantir had a heck of a day. This got through its 50-day moving average, basically completed that bearish 80% rule, and a real nice move back. And just impressive, only down 1.1% for the day. Still, has a mixed picture here. The level to watch here to retake this uptrend, or retake the the trend for the month would be 160.26. Robinhood, which I sold out of in the beginning part of today, and then I added back once I saw it coming back a bit. It did not retake the 20-day moving average, so I decided that to get out of Robinhood today, and I'll get back involved if it gets back above 107.30. Right, so that's kind of was just an easy decision for me to make at the end of the day. It's still below the 20-day moving average and 5-day moving average. GEV was a name that I've been watching for a while. I did buy some of this. I was able to take it, finished green. I went right around the lows of the day in GEV, and we'll see what it does. This also, again, so I kind of just picked and chose between a couple different names. I chose GEV for now over Robinhood, but I can get back involved because this still has work to do too, and it has to get above 616.50, and my stop is right around the 50-day moving average. Now, I said I would come back to well, I'll come back to CNBC in just a second and some of the commentary. But here's the Bitcoin ETF. It did finish positive for the day, and hanging on to that 50-day moving average. I can't believe how well some of these like crypto miners are acting. Here's our IREN, which closed back above its 5-period moving average, dipped all the way down here to below the 20, and buyers emerged. Another name that we've seen a lot of call activity in is Riot Blockchain, or Riot Platforms. I guess it's not called Riot Blockchain anymore, but it did manage to stay above its 50-day moving average and is trying to break into the value area for the month. So pretty impressive there. I mentioned the medical device companies. I've liked this group for a while. I just have been out of it for a while because it just hasn't acted very well. But it's looking to kind of clear this range, and I got involved in this. And again, I know right where this trade's going to work and where it's not going to work. If it breaks back into the value area for the month, I'll be out of the trade because I don't really want to sit in something that's in a range. But maybe this can stretch up to that VPOC up there, right around $64. Right, so that's what I'm watching there. And if you go through a couple of these names, Medtronic has been in the news lately with Elliott getting on the board, or having, I believe, having a couple of people on the board now, and had a really nice move from the lows and came back after earnings. But I like a few of these names. Abbott, TMDX. I actually got long this name. So again, I kind of went to some names that I've been watching for a bit and saying, okay, I'm going to take advantage of this dip and I'm going to get involved in this particular one. Why TMDX? They had really good earnings. It was the move. And then remember over here, you heard about an insider purchase. I think it was the CEO, and the name gapped up on that. And I just kind of watched it and I said, well, I'm not going to chase this big gap up. But look at it come back in here. So that's a tactical place for me to get involved. I'm right above that 20-day moving average, which is right here. So that is something, or no, I'm sorry, is that, yeah, I think that's the 20-day moving average in here. So I mentioned I would come back to CNBC. They were talking, Liz Ann Saunders was talking about different factors. And I think Cameron Dawson mentioned this too, just being in more quality names. I think that makes a lot of sense, particularly this time of year. August, September is a weak seasonal period. I would rather be in higher quality names, right? And a couple of these names I thought were interesting today. NOC, which had really strong earnings, never really sold off here. Now, again, this is up a lot. The last time I put out a chart of NOC, somebody got mad at me because they said it's up a lot. Yeah, it's up a lot. So that's a tough one, and I don't, I think the upside, I don't want to say is limited, but it's just going to be a little bit tough as it grinds higher. What I did get involved in was RTX today. Let's bring up the right stock here. Yeah, I mean, nice side. Remember, this had a nice earnings reaction. We know that the whole aerospace group has been a little bit weak, but notice it's going to come in here, and it is a little bit of a lower volatility name too. So I like the fact of the sideways range and trying to move higher. I also bought this right in the beginning of the day, which had a nice day today. But again, if you cover up the symbol in some of these names, you might actually like them. You might actually like this chart setup. Here it is coming into the two moving averages, the 20 and the 5, crunching a little bit, and a really nice move today, up 2.4%. So that's kind of what my thought was, and I agreed with the ladies on CNBC, Liz on Saunders and Cameron Dawson about being in just a little bit higher quality names and just spreading out a little bit and not being all in AI and not being all in, super high growth. I like that market a little bit better. I've done better. And that, again, it's not to say that I don't want any positions in high growth or in AI, but I think it's a little bit better than just those top heavy names doing all the lifting. I like to be a little bit more diversified. And again, have generate alpha by having, good, strong names, just not having to own every AI name out there. Now, I'll go through a couple of these names because I thought that they were kind of interesting for the day. ALAB, right? Again, coming into support. Like, I didn't buy this today, but this, comes into support the 20-day moving average and it bounced. NBIS was another one, right? Coming into the 20-day moving average, finding buyers. This is exactly what you want to see. So contrast that with yesterday, where there was a lot of names that broke the 20-day moving average, but not everything, right? Oracle, maybe the price got a little bit too tight here. I got out of Oracle about a week ago. I think it was like on this candle. I decided to get out, but this is a name that I'm going to watch. Nice support, and it did cross all the way through and complete the bearish 80% rule, and it's into the 50-day moving average. So that's something that I would pay attention to. So again, some of them the price action just was a little bit too tight, and let's see what some of these higher quality names that have been kind of just stuck up here for a little bit. So I think that this volatility and this move down, um, getting some of the weekends out of these stocks is actually a pretty good thing. So just a couple other names I was going to go through. Um, AppLovin, I started a trade yesterday in AppLovin and I got rid of it. But notice how it came back to the 20-day moving average. So, kind of filled this whole level. So again, these are, when you have this happen to you where you get stopped out of a trade, where you're in a trade, I scaled into a couple things yesterday and I got out of them this morning. It's okay. You gotta have to kind of shake it off. Right. And the analogy too is, sometimes if you make a couple mistakes in this market, right, or if you don't play every play perfect, you kind of have to think of it like, I'll use a football season analogy because we're going to be getting into football season, which is very exciting to me. But think of it as a really good quarterback. They have interceptions from time to time. Every once in a while, they throw a pick six, right? You can't dwell on that, right? Same thing with if you got caught in a couple trades today, right? If you sold everything yesterday, congratulations to you. That's a great job. But if you threw a pick six, right, or something to that aspect. You got to get over it, right? You got to win on the next drive and you got to put that mistake behind you because there's going to be a lot of opportunities coming away from this, right? We want dips to put money to work, right? These are actually good things, right? Once you kind of realize that you don't want to be buying these things after they're super stretched, but coming back in here and seeing a shakeout like that, you're going to get better opportunity. That's a better opportunity to me. So, if you've been doing this for as long as I have, you actually really like these market dips. It shakes everything up a little bit. So that's where I'm going to leave today's video. Guys, have a great night